Hello folks, the Fed towed the line and the market loved it, but not SoundHound it seems, which fell nearly 5% today, and it looks like this man might have been the catalyst. In this video I'll go over the Fed's rate decision, reasons for the sell-off in SoundHound today, and my forecast for SoundHound stock for the rest of the week. Before we begin, most of you are not subscribed, so please hit that like and subscribe button to get instant updates when I post SoundHound videos, and also I'm not a financial advisor, so take all my content with a grain of salt and seek professional financial advice if you need to. The Fed came out this afternoon and kept rates unchanged as expected, and the dot plot, which is a projection of rates going forward, remained the same with 3 rate cuts projected for the remainder of the year. So what does this mean and why did the markets go up? Essentially, the markets were expecting 3 rate cuts for 2024 and the Fed delivered. Now, the first rate will probably come in June unless something changes in the economy, which would change the Fed's view. That might come in the form of continued inflation surprises over the next few months. If that were to happen, expect the June rate cut to be delayed, which would cause the market to have an adverse reaction. I think the Fed is now shifting its attention to the labor market, which is actually showing some signs of weakness, as we can see here in the unemployment numbers ticking up recently. So if the market went up, why didn't SoundHound? I think the reason is because in the afternoon, we got a downgrade from one of the analysts covering the stock. The guy's name is Brett Knobloch from Cantor Fitzgerald. He lowered his forecast from overweight to underweight while slashing his 12-month price target from $5.80 to $4.90. According to this article, his reasons for downgrading are: it's an early stage in the company's development, lack of transparency in the operating model, a slowdown in organic growth, minimal R&D spend, loss of customers, and intensifying competition from larger technology firms. Let's go through his points one by one. First, he says the company is in an early stage of development. Well, not really. They're not a new startup with hopes and dreams. They've been around for 20 years and they have a solid product. So that statement is incorrect. Next point, lack of transparency in operating model. SoundHound has voice AI technology and they're building solutions for its enterprise customers. They get revenues from product royalties and licensing. Why is that so hard to understand? Third, he points out a slowdown in organic growth. So organic growth in this instance is growing revenues without acquiring other companies. We see strong growth in SoundHound's revenue, and whilst that includes some inorganic growth by way of acquisitions, I don't see anything wrong with that as long as the acquisitions make financial sense. I mean, they recently acquired a company called Sync3 who has contracts with Chipotle. It looks like they retained Chipotle as a customer and is probably in the process of signing up more services with them. So there's nothing wrong with inorganic growth if done right. Moving on, SoundHound is not spending enough on R&D. Well, it's been spending on R&D for 20 years. Now is the time for it to focus on commercializing its products, which means that it's natural that less capital goes towards R&D spend. Furthermore, SoundHound doesn't have the budget of say Meta or Apple, who spend billions of dollars a quarter on R&D. At this stage in its life, I would rather see SoundHound spend its money on marketing and customer acquisition to boost its revenues as much as possible this year. Okay, moving on. The analyst also says SoundHound is losing customers. I think he may be referring to the loss of Mercedes-Benz as a customer. Now it appears SoundHound had a small contract with them to put in voice AI in their multimedia systems a few years back, and unfortunately it didn't work out. The value of the contract was just a few $1,000,000, so it wasn't even that significant commercially. Is Mercedes-Benz a big name in the automotive industry? Yes. Was SoundHound's contract with them huge? No. It was a pretty small contract, and while the relationship didn't work out, customer churn is a normal part of every business. According to SoundHound's 2022 10K report, their customer retention sits at around 80%. Lately, they've been acquiring some bigger clients and expanding their domain to restaurants, so I'm not concerned about a few customers leaving here and there. And finally, he says there's intensifying competition from larger firms. Yes, Apple has Siri, Amazon has Alexa, and Google has Google Assistant, but these aren't known for being all that great. In fact, Cold Fusion recently made a video about how badly Apple has screwed up with Siri. And guess what? Apple's not doing anything about it. It's almost like they've given up on Siri. Maybe they'll buy SoundHound in the future, who knows. Anyway, I would recommend you guys watch Cold Fusion's expose because it's very well made as usual. In my opinion, most of these large companies are focused on LLMs at the moment, not voice AI. It might be the next frontier, but it'll take years of development for them to really make a breakthrough. So in summary, all of these points are sort of surface level arguments against SoundHound, and I'm not concerned with this analyst's criticisms at all. Furthermore, here's the thing. This guy has a terrible track record. Look at his tip ranks rating versus the other two analysts covering SoundHound who recently raised their price targets. Dan Ives has a near 5-star rating with a good average return on his calls. Gil Luria from D.A. Davidson is ranked even higher with an impressive average return of over 20%. So Brett Knobloch, in contrast, looks like a complete amateur with a laughable 2.5-star rating, a woeful success rate and a terrible average return. You're better off putting your money into cash than following his calls. To drive the point home, his colleague Eric Johnston is quickly becoming the laughingstock amongst equity strategists on Wall Street with his terrible calls on the market over the past 2 years. He's an equity strategist. Have a look at this call he made back in December 2022.
Which is why I think it is a lose-lose right now for equities.
A negative no matter what side of the
That's
ledger,
right.
which some make the case.
And part of the issue is that if the market does hold in there and he gets to 5.25%, that's just going to make the fall even greater down the line. So I think it's a lose-lose situation right now at 18 times earnings.
So forget the year-end rally. They all but killed that yesterday? Is that what you think? Despite your overall negative view, it doesn't mean that we couldn't have a tactical move within it, right?
Yes, I think it's very doubtful.
So he made this bearish call in December 22, which is right here on the S&P 500 chart. If we zoom out, he basically nailed the bottom. From his call, the S&P 500 has gone up around 35%. Imagine listening to this guy selling at the bottom and missing out on a whopping 35% rally. So yeah, needless to say, I think Cantor Fitzgerald is a D-grade Wall Street bank at best, and anything they say should be taken with a heavy dose of skepticism. You don't know what's happening behind the scenes too. Are they loaning out shares to short sellers and making money off it? Who knows? Basically, I wouldn't trust them so far as I can kick them, which is not very far. Anyway, with that said, let's dive into today's price action. In all honesty, it wasn't that bad a day with some decent positive volume in the afternoon with the Fed rate decision. If we zoom out to the daily chart, today we saw a penetration of the bottom of this wedge, which is bearish, but I mean, it sort of hugged $8 all day, so I'm not concerned. For the rest of the week though, I want to see SoundHound climb back into this wedge and hopefully have a breakout to $10 by Friday. This should be achievable if the broader market continues to go up. One slight worry is that the current market leader Nvidia has sort of gone limp since Jensen Huang's keynote speech on Monday, so I want to see that stock break out to new highs so that SoundHound has something to chase. But beyond that, I continue to hold my shares, I'm not selling, and my first target of $12 is still in play. Let me know in the comments what your first price target is, and if you like this video, please hit that like and subscribe button for daily SoundHound updates, and thanks for watching. See you guys tomorrow.